Well, things are looking brighter for General Motors. The new GM posting its first annual profit since 2004, coming in at a healthy $4.7 billion, the best numbers for the company since 1999. CFO Chris Liddell joins me now from Detroit. Chris, first of all, congrats, strong numbers. What's the main driver here?
It's a number of factors, and it's the things that we talked about in particular at the IPO. First and foremost, obviously, better vehicles. So we're selling a much better vehicle now than we were a few years ago, and so we're getting great demand for that. Secondly, though, is costs. We've obviously lowered our costs. I talked a lot about lowering our cost to break even at the bottom of the cycle, and so we're seeing our ability to make profits even at a low point in the cycle like last year. And I guess third, I'd add, is balance sheet. So we restructured the balance sheet, made a lot of progress there, and that's helping us as well.
So when you look at the big picture here, Chris, is GM at this point able to make a profit across the board, across your line of vehicles, or is it still really the highest margins coming from the trucks and the SUVs?
Yeah, the first thing I talk about is sustainable profitability over time, and then I'll come to your question specifically. So it was incredibly important for us last year to not only make a very good profit for the year that you mentioned, but to have consecutive profitability, so not have this up and down from profitability to loss. So the fact that we had 4 consecutive quarters of profitability was very good. In terms of the portfolio, yes, we still make more money typically in the larger vehicles than the smaller ones. So in particular with the environment that we're going into, that's something that we continue to address. So really focusing on our cost structure and focusing on things like global platforms for our smaller vehicles is going to be critical going forward.
Looking at the tension across the Middle East, it just seems to be spreading and increasing day by day. $100 a barrel crude we're facing right now. Does this have the potential, Chris, in your mind, to short-circuit the recovery that we have seen in autos?
Well, oil is clearly an issue, but the first thing I'd say, it's not a new issue. It's just more obvious in times like this. So we've seen a long-term trend over the last decade or more, and it's important from our point of view to do 3 things in that environment and continue to do them. First is a move towards alternative propulsion vehicles, so think electric. The Chevy Volt is a great example from our point of view. Second, to shift to smaller vehicles, so critical that we get things like the Chevy Cruze, which is selling very well out there. And third, most important in my mind, is just much more fuel efficiency across the fleet, whether it's small or large. So you're seeing mid-sized vehicles like the Buick LaCrosse getting mid-30s in terms of miles per gallon, which is unheard of relative to a few years ago. So we'll see oil spike and trough a little bit. That's just inevitable given the nature of it. The critical thing for us is to stick with a long-term strategy.
But given the tension right now and what's happening right now, Chris, are you worried not just for GM but for the entire industry that this unrest, these oil prices could pull back this recovery we're seeing across the board?
I always talk about the fact that the industry is cyclical and that we can't predict those cycles. I talked a lot in the IPO about this. Demand will go up and down. Oil prices will go up and down. We can't sit here and predict what that is. We couldn't have told you a month ago what oil was going to be this month. We can't tell you what it's going to be next month. What we need to have is a business model that is flexible enough and sustainable enough that it copes with all parts of the cycle and is, to the extent possible, all scenarios. So, yes, it could impact sales if we see oil go up. In terms of the mix, that's just one of the factors that we have to deal with in a cyclical industry.
Taking a look at China, obviously a lot of strength in China helped out these numbers in a major way. You're selling more cars there now than you are in the United States. But what we're seeing the Chinese government do is attempt to have a soft landing here from growth at 10%. That they're pulling back. They're trying to rein in inflation. What are you preparing for that to do to your sales in China? Will it have an impact?
Well, again, I think you have to look at it in the context of long-term, and then you'll see short-term volatility around the long-term trend. China is still incredibly low penetration in terms of vehicles per person. It's really just ramping up. So it might be the biggest vehicle market in the world, but remember they've got 4 times the number of people we have and only roughly the same number of vehicle sales. So there's still a lot of long-term potential in terms of growth in China. What you will see is volatility around that long term. Our view is it'll grow modestly this year. It won't grow exponentially, but we're still expecting it to be a pretty good year in China this year.
The Volt, you mentioned it earlier, a halo company, a halo car for the company, if you will, winning, Car of the Year award at the Detroit Auto Show. But let's talk about the Volt long term. First of all, how has the sales volume been? What's the demand like? And then when do we get to a point where this is a car that is not only in demand but is profitable for GM?
The volumes are still relatively modest. We launched it at the end of last year, and we're starting to ramp that up. But it's in the thousands. Mm-hmm. It's not in the tens of thousands or hundreds of thousands. So it's an incredibly important vehicle, and one that we will distribute right throughout the U.S. as time goes on. But it's going to be important, in my mind, in particular in terms of profitability, to move very quickly to a broader base for things like the architecture under the Volt, and also to move to the second generation. So Volt, incredibly important, but again, it's part of a much more longer-term commitment.
Let's take a look finally at your obligations still to U.S. taxpayers. You paid back roughly half of that, still $27.1 billion to go. Shares need to rise about 50%. Obviously, that all has to do with investors' interest in General Motors. What is your take on a timeline here, Chris? I know it's hard to predict, but looking at when you think taxpayers will be paid back in full, what are we looking at here?
Well, as you say, it's really outside of our control. The U.S. Treasury, can determine after a lock-up period when they wish to sell their shares, and that's really going to be at their discretion. The thing that we will do, obviously, is support their sale. We will facilitate it to the extent possible, and we'll continue to do the things that we're doing at the moment, which is driving the profitability as much as possible, hopefully in a good environment with a positive outlook. The share price will be as high as possible, and the U.S. Treasury will get back as much of their money as possible and as quickly. But to a large extent, timing is outside our control.
Sure. Well, still, these numbers, a good place to start. Congrats on the earnings, and Chris, thanks so much.
Thank you.